Hey insiders! On Tuesday, the price of XRP surpassed $1.50, following a nearly 15% increase in the previous 24 hours. Can this be the start of a revolution, and can this dethrone Bitcoin? Welcome to our channel, Financial Insights, the place where you are always a little bit smarter and wiser after seeing one of our valuable videos so you can develop your financial knowledge. Don't forget to press the like button and subscribe to our channel. Make sure to watch till the end. While it is true that no one person governs the Bitcoin network, things have changed since the network's inception. When Bitcoin was first published, anyone could become a miner by purchasing a GPU or CPU, both of which are inexpensive to purchase. However, a piece of costly hardware known as an ASIC can now be used. Since ASICs are much more powerful than GPUs and CPUs, they will always have a better chance of winning the mining prize. As a result, those who cannot afford ASICs are denied an equal opportunity to contribute to the scheme. This isn't the only issue though. Mining pools, through which various Bitcoin miners pool their money to increase their chances of earning the Bitcoin mining reward, are now managed by some powerful organizations. They build Bitcoin mining farms with tens of thousands of ASIC chips. The concept is simple. The more ASIC devices you own, the better your chances of winning the prize. The majority of these mining pools are in China, where electricity is cheap. This concentrates a great deal of power in the hands of a limited number of individuals, which goes against Bitcoin's decentralized philosophy. Cryptocurrency enthusiasts are also concerned that Ripple XRP is not as decentralized as it should be. To begin with, unlike Bitcoin, the Ripple coin is managed by Ripple Labs. It's important to note that, while they don't have the authority to change transactions or manipulate people's funds, they do have control over XRP supply. There are approximately 60 billion coins in circulation, out of a total supply of 100 billion as of June 2018. The major issue is that the remaining 40 billion, 40%, is managed by Ripple Labs, which was established by Ripple's founders. They have the ability to do whatever they want with the coins, which means they can theoretically control the price. If Ripple Labs decides to issue a large number of the coins they control, the price can suffer. Another point of contention we discovered when studying the Ripple versus Bitcoin comparison is that certain people are unhappy with the fact that the blockchain is not maintained by the XRP group. In the case of Bitcoin, despite the fact that massive mining pools have dominated the system, anyone can try to contribute to the network by buying the necessary hardware. This is not the case with Ripple, as XRP cannot be mined. Instead, the network employs a system known as transaction validators. The banks that install the technology are the only ones that can become transaction validators. It is also technically decentralized since no single validator can take control of the network or modify or exploit a transaction. Some people, however, believe that everyone, not just financial institutions, should be able to connect to the network. Proof of work is the first blockchain consensus mechanism, and it was developed by the creator of Bitcoin. Consider a particularly complex equation to better understand proof of work. The Bitcoin network creates a random equation that no person could possibly solve. Instead, it necessitates a significant amount of computing power to solve. It takes 10 minutes to complete the estimate. The Bitcoin transaction is verified as legitimate until it is solved. Any node connected to the network competes with one another to be the first to solve the problem. The Bitcoin mining reward goes to the first person who arrives. The proof-of-work model's biggest flaw is that it necessitates extremely large quantities of energy. According to a new report, Bitcoin mining uses more energy than 159 countries combined. The second problem with proof-of-work is that it requires users to use very costly hardware, which means that those with more resources to spend have a much better chance of winning the Bitcoin reward. Finally, and perhaps most critically, the proof-of-work model has exacerbated the problems of high fees, slow transactions, and scaling. Federated Byzantine Agreement is the consensus framework used by the Ripple blockchain, FBA. FBA, like Bitcoin and its proof-of-work model, aims to achieve consensus among nodes. Each node in FBA can only trust a small number of other nodes, referred to as a circle. The Ripple network is made up of several different circles that overlap each other, allowing each node to be linked in some way. Before being able to participate in transaction authentication, transaction validators, banks that use the technology, are individually identified and certified. This means that, in practice, none of the banks that use the technology would want to tamper with consensus because it is used to facilitate their transactions. And if they did, the other transaction validators would be able to tell who would simply deny the transaction. Ripple and its FBA consensus system, unlike Bitcoin, do not need to solve complicated equations, so it consumes much less energy. This makes the system more effective and ensures that transaction costs are kept as low as possible. Finally, in the few seconds it takes for the machine to validate a fund transfer, at least 80% of the transaction validators must agree to mark the transaction as valid. When it comes to the debate between Ripple and Bitcoin, one thing that everybody can agree on is that both blockchain projects have performed admirably. However, as the first cryptocurrency, Bitcoin has always been the most valuable, market capitalized, adopted, and used in the real world. BTC's value rose by more than 2,000% in 2017, making it the most profitable year to date. Bitcoin had hit an all-time high of $20,000 by the end of the year, with a total market capitalization of just over $320 billion. To put this in perspective, this amounted to Goldman Sachs and Morgan Stanley having higher market capitalizations. In terms of real-world applications, a number of merchants are starting to consider Bitcoin as a form of payment. This is particularly true in Japan, where Bitcoin can now be spent in over 200,000 different establishments. Microsoft, Expedia, PayPal, Overstock, and even Virgin Galactic are among the well-known companies that support Bitcoin. Bitcoin, on the other hand, would take a long time to become a popular global payment system. The primary explanation for this is that the developers must address performance problems, transaction times of 10 minutes, high fees, and scaling levels of just 7 transactions per second are a million miles away from becoming a viable global payment system. The good news is that the team is working on Lightning Network, the second layer of payment technology built on top of Bitcoin that will hopefully take Bitcoin to the next level with easy, low-cost, and highly scalable transactions. So, what's the deal with Ripple XRP? In terms of market capitalization, Ripple is now the third most valuable cryptocurrency. The Ripple coin, like Bitcoin, had a fantastic year in 2017. It was only worth 0.0065 at the start of the year. By the end of it, however, it had risen to a whopping $2.40. When it comes to the parent company's actual goal, Ripple Labs, they're forming some pretty strong collaborations with some of the world's largest banks. The Ripple protocol is currently being tested by over 100 financial institutions, including Santander, Bank of America, and Crédit Agricole. The financial sector is expected to use XRP to resolve interbank payments in the future. The entire industry is worth trillions of dollars per year, so if everything goes according to plan, the value of XRP might reach new all-time highs in the near future. And if you heard of the Great Rest, you'll know what we're talking about. Then you'll have a good idea of how high it is for XRP. This is a complete game changer. As a result, a fintech or financial technology is needed to link underbanked and unbanked countries or communities to the digital economy and to assist small businesses in a number of exciting ways. Fintech has been branded as XRP by the World Economic Forum. You probably already know what that means for XRP and how it would affect it. According to the World Economic Forum, government agencies and central banks are exploring the capacity to solve perennial global financial problems, such as financial inclusion and payment system stability. In the emerging CBD space, they have named Ripple's XRP as the most significant cryptocurrency for inter- and intrabank payments and settlements. You now have a deeper understanding of what makes XRP so famous. The latter is needed for XRP to dethrone Bitcoin as the most valuable cryptocurrency and conquer the moon. If the current trend continues, XRP will reach $500 by the end of the year and $10,000 by the end of the year. The Great Reset, on the other hand, will have a major impact on the price of XRP. Experts expect that if XRP is used as a universal payment currency after the Great Reset, it will become highly scarce. As a result, the value of XRP will skyrocket to levels comparable to Bitcoin. So, what are your thoughts? Do you think Ripple can beat Bitcoin in its game? It's high time to dethrone the king. What are your thoughts? Let us know in the comments below. Thank you for watching. Follow us on Instagram and make sure to subscribe and check out our other valuable videos. See you soon at Financial Insights.